Good afternoon. Getting right down to business here. We're doing it live, doing more at 4 weekday afternoons. It's Mottek On Money, live on the air, 790 KBC, streaming live online worldwide at kbc.com, and you're on demand. Mottek On Money podcast, kbc.com, Apple, iTunes, YouTube, all of your favorite podcast platforms. Record-shattering week on Wall Street. Stocks moving higher today. The S&P 500 has just racked up its fifth straight record this week. And the NASDAQ is also ending the week at an all-time high. The latest earnings news and optimism on the trade front boosting the market this week. President Trump also easing concerns by downplaying talk of firing Fed Chair Jerome Powell in that big meeting they had this week. The Dow came in for a closing gain of 208 points, settling at 44,902. The S&P 500 popping 25 to a record high 6,389. And the NASDAQ moving higher today to a record high close at 21,108. The volatility index pulling back today by 3%. The yield in the 10-year note now at 4.39%. Keeping an eye on cryptos a week after a crypto week. We see a Bitcoin hovering at around 117,000 today. Ethereum at 3,722 and Doge at the moment at 23 cents. We'll be having a big discussion on crypto here in just a moment. The market rallied this week on news of a U.S.-Japan trade deal that boosted optimism for more deals like that one. And now we got a big week coming up. Big two-day meeting, policy meeting from the Federal Reserve next week. We also will be getting the monthly jobs report next week on Friday. And a lot more earnings news in the tech world. Apple, Meta, Microsoft will be reporting earnings, as we discussed yesterday with the tax expert Dan Ives from Wedbush. If you missed that one, you can bring up the Mottek On Money podcast now at kbc.com. We're also watching what's happening on the European Union trade front. A report suggests the two sides, that is the U.S. and EU, don't see eye to eye on how to share profits from a $550 billion fund for U.S. investment planned as part of the Japan deal, and looking to maybe do something like this with Europe. All of this impacting the car business especially, and I'll discuss that and more with our go-to car expert, Lauren Fix, editor-in-chief of Car Coach and the co-host of the Total Car Score podcast. Gold did take a breather today, pulling back about $35, back to $3,338 after spending part of the week above $3,400. Platinum hovering above $1,400, and silver made a run for $40 an ounce this week, but it's back to $38 and change. I'll discuss the very latest action in the precious metals this hour with Barry Stupler, founder and president of Mint State Gold by Stupler & Company, based in the San Fernando Valley. He's also former president of the American Numismatic Association, so he's a rare coin expert as well. Crypto did take a breather today and pretty much this whole week, pulling back following that huge rally we saw last week, in which we saw Bitcoin pop above $123,000 to a record high. Right now, it's just above 117,000. That rally last week followed the president's signing of the Genius Act, legislation aimed at regulating stable coins, and looks like a couple of other bills are still hanging out there. And joining us live now is Eleanor Terrett, business journalist, crypto expert, and co-host of the Crypto in America podcast. Eleanor, thank you very much for taking the call here this afternoon.
Of course, Frank. How are you?
We just came off of Crypto Week, but for you, every week is Crypto Week. Every day is Crypto Day, so you're the expert in all this. Give us an update here on what's happening on the crypto scene, especially the price action this week.
Yeah, absolutely. So you mentioned a little bit just now, but we did see a broad sell-off across most major cryptocurrencies this week, with Bitcoin dropping to around $115,000 per token this morning due to a landmark $9 billion sale of 80,000 Bitcoin from an investment firm on Wall Street called Galaxy Digital. It's run by former Goldman trader Mike Novogratz. This transaction was one of the largest in crypto history and came from one single investor, if you can believe that, triggering a 3% dip along with $600 million in market liquidations just this week. But the cool thing about the crypto market, Frank, is that it doesn't shut down at 4 p.m. on a Friday like the stock market. It's already bouncing back. We're seeing Bitcoin investors, they're encouraged by how well the market seems to have absorbed such a massive move. And as you mentioned, I'm going to pull up my coin market cap dashboard here right now. Bitcoin just over $117,000 right now. Meanwhile, XRP, Dogecoin, and Solana, some of our favorite altcoins, saw some double-digit drops during the week. But looking at CoinMarketCap right now, they're all trading higher again. So I think you said this last week on the show, Frank. They go up, they also go down, but then they often go back up again. It's a roller coaster ride keeping track of these crypto markets for sure.
And it's a lot more fun when it goes up, of course. But yeah, I'll say it again. It goes up and it goes down. So everyone knows Wall Street has that opening bell at 6:30, and that is L.A. time, and at 1 p.m. Is the close here West Coast time. In New York, of course, 9:30 a.m. till 4 p.m. Now, when we look at the price of Bitcoin, for example, we see it does recycle at some point, right? So what is the timing of the crypto market these days?
Well, right now, investors say we're in altcoin season, which is actually a term used when the other coins that are not Bitcoin, so your Ethereums, your Solanas, your XRP, outperform Bitcoin, as percentage-wise for a sustained period of time. They call it altcoin season. There's some question now as to whether altcoin season is coming to an end. Bitcoin, we have seen, hit an all-time high. Actually, a couple of days ago, it went above 123,000, the highest it's ever been. So, there's some argument there that we could continue to see a rally in Bitcoin's prices. We're obviously going to have to keep an eye on the macro headwinds. What's going to happen with the Fed, with interest rate cuts, and all those things that we like to tie into not just the stock market but also the crypto market as well. But it seems we're still in a healthy bull cycle at the moment, Frank, at least according to investors I'm speaking to.
Speaking live to Eleanor Terrett, who's a crypto expert, co-host, and actually, star, I think, of the Crypto in America podcast. And what I was asking there is there does crypto, the crypto trading day, if there is one, recycle at Greenwich Mean Time, or is there a 24-hour cycle here? Because when we pull up the prices, we see at some point it does recycle, right? So I don't know. Does anybody have the answer to that?
I just say that again. I just don't think I understand quite what you mean.
Is there a trading day? Obviously on Wall Street.
Oh, I see what you mean. Yes. Oh, well, it's a continuous cycle, Frank. It doesn't end. It never stops trading. And that's the cool thing about the cryptocurrency markets, right? Is that they are literally 24/7. And that's why you see, so much price action all the time. It's hard to keep track of sometimes because, we could be down 1.5% this morning, and all of a sudden we're up, 3% by the afternoon. So it's a job to watch the market in and of itself. And if you remember, when I worked down at Fox Business, I was on the floor of the New York Stock Exchange. I was tracking the stocks and all the traditional assets down there on Wall Street, and that's much less of a job, right? I mean, it's obviously a job in and of itself, but that job ends at 4 p.m. Eastern time. Right. On the East Coast and opens at 9:30. So there's definitely a consolidated trading day there. But with the crypto markets, it's 24/7. So, you can get in and get out anytime you want.
Right. And we got a lot of balls in the air covering all of this. And we appreciate your expertise here. Now, we spoke last week after the Genius Act was passed, right, and signed into law by President Trump. So where do we stand here with the other two big ones that are still hanging out there?
Right. So last week, we did see the Genius Act become law. President Trump signed that into law on a Friday afternoon. And the Genius Act, as you know, creates a federal framework for payment stablecoins. Stablecoins are cryptocurrencies that are backed one-to-one by the U.S. dollar. And I want to just touch on the results of that before we get into the other two, because I will definitely get into that in a minute. But I just want to reiterate really what the effect has been, sort of the ripple effect, right? So Trump signs the bill into law on Friday. There was already a lot of movement in the stablecoin space. A lot of the big Wall Street names were considering getting in, but consider this a green light, Frank. So, we've seen asset manager just this week, right? Asset manager WisdomTree, which manages $126 billion. It just launched its own dollar-backed stablecoin this week. It was quietly developing it behind the scenes, launched it this week. So, that's certainly an after effect of the Genius Act signing. It's not just WisdomTree, though. Goldman Sachs, Fidelity, Citi, and they're all making big stablecoin moves. Citigroup's CEO Jane Fraser, she confirmed on a earnings call, I believe it was last week, that they're looking to issue their own stablecoin potentially. Fidelity is testing tokenized money market funds. And then two of the largest global banks, Goldman Sachs and BNY Mellon, built a platform for institutions to trade tokenized money market funds on Goldman's own blockchain. And that was announced earlier this week. That was a big move two massive TradFi names now coming into the world of so-called DeFi, decentralized finance. What is a tokenized money market fund, you may ask? It's simply a money market fund that has a digital twin on the blockchain. So it can basically be bought and sold, transferred instantly without the usual delays or the paperwork that kind of goes into the traditional means of trading money market funds. BlackRock, Franklin Templeton are some of the other firms that already had those tokenized money market funds before the Genius Act, but we're certainly seeing a surge now that this has sort of been codified into law, right? There's no regulatory, at least much less regulatory uncertainty now than there was in the prior administration, Frank.
Certainly. Eleanor Terrett with us, co-host of the Crypto in America podcast, a crypto expert, and that ceremony took place in the Rose Garden, right? Did you end up attending that ceremony?
So it actually wasn't in the Rose Garden, as it turns out. It was in the East Room, so it was inside. And actually, I was there. I have a little bit of a story on that, but I was grateful when I was standing outside and realizing that, okay, this is actually an indoor ceremony, because I will tell you, it was hot as heck that day. And so I was just very grateful that it was inside. However, yes, I mentioned that I was going to be attending the ceremony last week on your show. Unfortunately, we had a little bit of a snafu on the way in. You may know this, Frank, from my Twitter page, but I recently became a U.S. citizen. And, to go into the White House as a member of the press, you have to fill out a couple of forms, and basically it asks you for your citizenship status. I had put in that I was a U.S. citizen now, and then I think I complicated matters and maybe confused some people by putting in my UK passport information, because I just don't have my American passport yet. It hasn't arrived. I have obviously my citizenship, just haven't got the necessary passport yet. So unfortunately it was held up, and by the time the ceremony had started, it still wasn't figured out. So unfortunately I had to miss it. I did watch the whole signing ceremony, though. It was very it was very entertaining. It was very, Trump was on forum. He was talking to, shouting out all the crypto CEOs in the room. There was a lot of big power brokers in there, Frank. Coinbase CEO, the Tether CEO, the Kraken CEO, like just any of the big crypto firms. Ripple's had representatives from their team there. So it really was a gathering of the industry, along with the trade associations and some of the legal representatives as well in that room, members of Congress, right? You probably saw the photo that's been going around, Trump holding up the signed bill, and he's got the CEOs around him, and also the House members and a couple of senators as well. So it was a triumphant day to be in the industry for sure. We'll kind of touch on what we can expect from, the legislative point of view going forward. If that's interesting to you, I can certainly go into that.
Yes, absolutely. Well, thanks for sharing all of that, and that's absolutely fantastic. So hopefully you'll be at the future signing ceremonies, right? So what's on the agenda now?
Right. So the House is now on August recess until September. They broke today following their massively successful crypto week, which was last week, obviously. They passed 3 crypto bills, which we did speak about in depth last week, but we'll give your listeners a little refresher. The Clarity Act aims to give clear definitions and sort of rules of the road, regulatory guidance for players in the crypto industry. The Genius Act, I said before, creates a federal framework for stablecoins. And then there's the Anti-CBDC Surveillance State Act, which is a bit of a mouthful, but it puts limits on how the central bank puts limits on central bank digital currencies, these stable coins issued by, the Federal Reserve, if you will, kind of protects user privacy and prevents government overreach. Now, the ball is in the Senate's court. Passing these bills will be a much tougher challenge due to the Senate rules, right? In the Senate, you have to have 60 votes to break the filibuster, which means you need a significantly more bipartisan support in the Senate than you do in the House in order to get legislation passed. Now, it proved to be quite an uphill battle with some of these Senate Democrats, especially the Elizabeth Warrens of the world and Chris Van Hollen as well, expressing concerns around President Trump's family. Have launched, obviously, a lot of crypto businesses in the last couple of months tied to, meme coins and stable coins and Bitcoin mining. And they're concerned that Trump will, inappropriately financially benefit from it. They're calling for ethics provisions to be put in these bills. Some of the Republican senators are concerned that putting those in there will make it not pass. We'll have to see kind of what the outcome will be when they return from break. Now the Senate goes on break. They're scheduled to go next week and come back in September. And there is this small caveat that, the Senate also plans to craft its own market structure bill, its own version of the House's Clarity Act, right? Last week, the Banking Committee released a discussion draft, and it's asked market participants for their feedback on it and to kind of weigh in and say, hey, are we doing this right? Give us your take on it. We want to work with you. So really, the Genius Act has already passed. The Clarity Act is now sitting in the Senate, kind of waiting for, the Senate to do something with it, while also working on their own draft. And then the Anti-CBDC Surveillance Act is supposed to be attached to the defense spending bill. So we'll see if that happens. But basically, with the Senate weighing in, the complexities around the procedure and the concerns around the bipartisan support, it's very unclear when we might see President Trump sign the Clarity Bill into law, Frank, when we might see another one of those ceremonies. But industry participants are hoping that by the end of the year, we should be able to do the same as the Genius Act and get it signed into law.
All right, we're waiting for clarity, certainly, and
waiting for clarity.
But we're hearing it from you very well this afternoon, Eleanor. That is terrific, and certainly from a price action standpoint, we've seen some almost hysterical predictions of where Bitcoin goes from here. Enthusiastic predictions, certainly based on who you talk to. What are they saying about where things go from here from a price standpoint, not only for Bitcoin, but some of the others that have already made impressive moves? Ethereum has certainly come to life, came back from the dead recently, right? Ethereum is above 3,700 here. Doge even got a pop now at around 23 cents.
Yeah. So I think it depends on, honestly, who you talk to. You've got some Bitcoin, serious Bitcoin proponents, people like Michael Saylor, CEO and founder of Strategy, right? He buys more Bitcoin every week than, I think anybody could hope to own in a single lifetime. But it really does depend on who you talk to. Bitcoin bulls will say, oh, we're going to the moon. We're going to a million, hopefully in the near future. I'm not sure whether that will happen. We'll have to see, obviously. But the consensus from, some of the big Wall Street firms who actually do track this stuff, I believe Bitwise asset management firm has put a price prediction of 200,000 by the end of the year. And a lot of these sort of more, outrageous calls are, it's a bit of the lore around crypto, right? There's this thing called, go to the moon. It's a bit of a saying like, we're taking off, we're going to Mars. But the, sort of the realistic predictions, I think, Frank, are based on, the regulatory clarity that we are getting from the regulators, from Congress, Trump's obvious endorsement of the industry, if not his involvement, his endorsement for sure. We may be getting a strategic Bitcoin reserve, maybe some more details on that in the coming days. We're actually supposed to get a report from the White House. It's an interagency report, the product of 180 days of work between the Treasury Department, the SEC, the CFTC, and other agencies, basically recommending proposals and things that we can do with the crypto market going forward. Hopefully, there should be some things in there that limit the so-called restriction of debanking, restriction of crypto companies having access to bank accounts, having access to master accounts at the Federal Reserve. It's unclear exactly what will be in that report, but some proposals may circle around that. A lot of industry folks are hoping that it'll be another watershed moment for the industry. We've had a lot of those this year. So a lot to keep an eye on, Frank.
Absolutely. Well, yes, and we appreciate that very much. A lot of bullish enthusiasm, certainly in the crypto space. Nobody's talking about how low it could possibly go, only how high it could go. So we're gonna keep an eye on it. We're gonna keep an eye on it with your help there, Eleanor. And by the way, we have rose gardens here in Southern California. So next time you're out this way, we'll get you into a proper rose garden here and make sure you don't miss out on all the great places here as well. And look forward to seeing you at the upcoming conferences here. Any other big crypto conferences coming up that you'll be attending?
Yes, there's one in August in Wyoming. It's the SALT Conference. It's put on by Anthony Scaramucci, who I know you are familiar with, but it is held in Jackson Hole. There's going to be a lot of high-profile people there. The SEC Chair, Paul Atkins, is going to be there. Feds, Michelle Bowman, and Christopher Waller. a lot of senators, a lot of Congress people. It's going to be big policy focused, and it's going to be in the beautiful state of Wyoming, which I have never been to. So I'm very much looking forward to my trip out there.
That sounds terrific, Eleanor. Thank you very much for taking the call here this afternoon. Another big week for crypto. Eleanor Terrett, business journalist, crypto expert, and co-host of the Crypto in America podcast. Of course, also big on social media too. Eleanor, thank you very much for joining us live, and look forward to speaking with you again very soon.
Thanks, Frank. Have a great weekend.
You too. Thank you very much. And we'll talk analog gold here after talking digital gold, analog gold, and the precious metals coming up in the next half hour. But right now, let's get the latest on your ride this afternoon here on 790 KBC. Frank Mottek here for United Gold Group. Did you know that for more than 10,000 years, gold has been the greatest store of value and considered a safe haven asset to preserve your wealth? And now with the U.S. debt of more than $36 trillion and climbing, a possible recession on the horizon, and the development of the digital dollar, central bank digital currency, it's more critical now than ever before to safeguard your assets like your cash savings and retirement accounts with physical gold. Opening a gold IRA is one of the best ways to secure your wealth and create a stable financial future. Stop worrying about your retirement in the market and cash savings of the bank. Feel confident, prepared, and in control with physical gold and silver. Give my friends at United Gold Group a call. The number is 800-753-8534. Mention Mottek, and you could get $1,000 worth of silver with a qualifying purchase. Call now, 800-753-8534, 800-753-8534, or visit UnitedGoldGroup.com. Mottek On Money continues, 790 KBC. Good afternoon. Big finish to the week on Wall Street. Record highs for both the S&P 500 and the NASDAQ. The S&P 500 up another 25 points. Good enough for a record high, 6,389. 5 record highs in a row this week. NASDAQ of 50 at 21,108. The Dow up 208 points at 44,902. For the week, the Dow is at 1.3%, the S&P 500 at 1.5%, and the NASDAQ at 1%. One thing that came down this week, the volatility index down 9% this week, down 3% today. Looks like the market got a boost on the earnings news this week and optimism about progress on the global trade front, especially with the European Union. Looks like intense talks going on between the U.S. and the European Union on tariffs and so forth. The price of gold pulling back today, down 35 and change to 3,338.40. Platinum down nearly 7 at 1,433 and change, and silver back to 38.33. Bitcoin at 117,200 at last check. Ethereum at 3,722. Solana, which was above 200 this week, at 186 now. Doge at 23 cents. And now the latest news in 790 KBC. Mottek On Money continues, 790 KBC. From so-called digital gold now to good old analog gold. Gold did take a bit of a breather today. Spent most of the week above $3,400 an ounce. It's been a sizzling year for, well, at least 6 months anyway, for gold, moving above $3,500 recently, hitting a record high. Right now it's hovering at around 3,300 or so. Platinum, meanwhile, hovering above $1,400. Silver making a run for $40 an ounce this week, back to around 38 and change. Following all these moves very, very closely, joining us live now is Barry Stepler, founder and president of Mint State Gold by Stepler & Company, based in Woodland Hills, also former president of the American Numismatic Association, rare coin expert. Barry Stepler, wonderful to have you with us here. Good afternoon to you, sir.
Hey, it's an exciting time right now. I think I told you earlier that I was in London for the last since Wimbledon, the tennis event, and I met with some friends of mine in London who are currently working on the on the London Commodity Exchange, and they represent a lot of governments. I don't know if your listeners realize it, but London's been the center of most gold and silver trading for hundreds of years. Most of your European, Middle Eastern, and in many cases Asian governments deal directly through London. Some deal with New York, but most of them deal with London, and they have for hundreds of years. So I had the opportunity to meet with a good friend of mine who I met about 40 years ago, who's now a major trader on the exchange. And we talked for 2 hours about what's happening in the precious metal field, and he's just excited. He said he went long when Trump got elected in November, and he hasn't looked back since. So gold is just looking good, and central banks are aggressively buying gold and dumping U.S. currency. That's why the U.S. dollar is dropping like it's been dropping. And you're seeing a lot of that, and buying not necessarily from central banks, but from a lot of individuals. So gold got as high recently as 34.42. Now it's trading at around 30, down about $100 from that level. So you're just seeing some profit taking. But you have to realize that gold's obviously gone up this year from 2,600 to over almost 3,500. So seeing some profit taking is normal. And the same thing with silver. Silver's been even more exciting. It got up to 39.50, and now it's sold off a little bit. It's around 38.40 right now. So it's on its way to $40 and possibly $50 by the end of the year. So you're seeing a lot of buying. But the interesting thing is most of the buying is not coming from inside the United States. It's coming from countries that are concerned about our currency, concerned about our economy, and they want safe haven investment. And obviously gold has proved to be the best safe haven investment for over 1,000 years. So it's just a lot of interesting times right now, things happening right now that's affecting the gold and silver prices. You mentioned platinum. Platinum was just dead for almost 6 or 7 years, trading under $1,000. Just recently, it's picked up and got to almost $1,500, and it's trading right now about a little over 14. So we're starting to see some action in platinum, but the majority of central banks are looking primarily at gold. They don't look at platinum other than the Russian bank, which obviously keeps platinum, but not as a reserve.
On your live with Barry Stelter, very interesting, and sounds like you had a wonderful trip there with great friends in the mix as well, and certainly talking about your favorite subject, gold and precious metals. Now, and it's just kind of human nature when things make record highs, they get attention. That's when people tend to pile in here, including platinum, not well off its record high, by the way, and it certainly has made an impressive move. But there was a time when platinum was actually worth more than gold. You think that might happen this time around?
I doubt it. Platinum is scarcer than gold, so yes. Is it worth more than gold? Technically, yes. But the issue of the gold buying is not so much because of the rarity, it's because of the safety that it represents. It has for hundreds of years been the best, safest asset in times when currencies have come and gone for hundreds of years. But gold is still the real safe haven investment. It's the real asset you want to keep, and it's proven to be that. Platinum is attractive from a commodity point of view. It's attractive. If it can get over 1,500 and stay there for a short period of time, it may be worth an investment. However, gold is a proven investment, and silver is right hot on its tail and actually doing a lot better. Silver is up almost over 30% this year, and and gold's only up about 28. So not a bad return for your capital.
Silver hasn't seen a record high since 1980, right? When it hit $50 back in those days. Where do you think silver goes from here?
Well, it did get up in 2011. It did get up to about $49, but that was a very short term. So I look for silver to probably be $50. I don't know what it's going to do with this year, but I would probably say by the middle part of next year. But it pretty much tracks gold. It sometimes leads the pack. Sometimes we see stronger buying in the silver than gold, but right now typically it's gold that leads the pack on precious metals. So I'm saying we tell our clients right now to do about 60% in gold and about 40% in silver, and that pretty much keeps them diversified. And if platinum, like I said, breaks above 1,500, we might do 10% in platinum.
All right, and there's another one in the mix that hasn't been talked about at all. Palladium, right? There are actually palladium coins, too, and we see palladium at 1,260. We'll keep an eye on that one, too. What are your thoughts on that one?
Well, there are platinum coins, there are palladium coins, obviously gold and silver coins. So there's all number of ways that you can invest in any of the four precious metals. Palladium is scarcer than platinum, and yet it's less than platinum. But because a lot of it is mostly industrial uses, analytic converters, solar power, things like that is what pretty much shows the demand. But gold is central bank. Gold is where the biggest investors in the world are all the various world central banks. They're the ones that keep gold as reserves with the dollar and with their domestic currency. And if they're dumping dollars and buying gold, gold's heading a lot higher. Jim, the guy that I met in London, thinks gold will be over $5,000 by the middle part of next year.
Isn't that something?
That blows me away.
So are people coming to you mostly to buy or to sell at this point?
We're getting a good balance of both. Most of the people that I handle, I've been investing with me for probably 20, 30, 40 years. And a lot of them have major profits, and they call up and they say, well, is it time to sell? And my answer is always the same. If you have a better use for the money, if your kid's getting married, you're planning a vacation, you're buying a new house, and you need the money, sell it. Other than that, just keep it. It's going higher. And it's been proven to be right. It keeps on going higher.
Barry, great to have you back here in the colonies, and we hope we stay in touch here as this excitement continues in the precious metals, certainly, and welcome back to the States. Thank you very much for taking the call, having just returned from London. Barry Stupler, founder and president of Mint State Gold by Stupler & Company, former president of the American Numismatic Association, live with us here on Mottek On Money on 790 KBC. Mottek On Money continues, 790 KBC. Good afternoon. U.S.-Japan trade deal done, and now it's Europe's turn, it looks like, to get a deal done. All this impacting the car business especially. Joining us live now is our go-to car expert, Lauren Fix, editor-in-chief of Car Coach and the co-host of the Total Car Score podcast. There's always a lot to talk to you about, Lauren. Let's start with the tariff story and this U.S.-Japan deal now, and next up, it appears we could get something from Europe this coming week. Give us your assessment here and how it's impacting consumers at the dealerships.
Well, I think there's going to be interesting response. We're seeing that car manufacturers are starting to wake up to the fact that they're going to have to make some changes to, one, meet consumers, what consumers really want to buy. And then in addition, they have to realize that the government doesn't run their business. They have to run their business. And so what we're seeing is with these tariffs, some brands are pulling back on their offerings. Like Volvo has said they're going to cut back on some of the product that's being produced in other countries. That is as expected. But the Japanese made a great deal with President Trump, and they gave $550 billion that they can use however they want. The funniest part of it, actually, is the fact that they have to buy rice from us, which makes no sense. But that's a good negotiation tool on somebody's part. But the interesting thing is we're not going to see an increase in price of vehicles from Japan because most of the cars are being built here. Anyhow, Honda has plants in Kentucky and Ohio, and they're producing more vehicles here. They're shutting down or changing the production of their plants in Mexico. You're going to see that with Toyota as well. And on the Korean side, they were first to the table, which was really smart. And they've invested money in not just a steel plant in Louisiana, but also you're going to see additional production in the Birmingham, Alabama plant for Hyundai, in the West Point, Georgia plant for Kia. And so all of this means that initially you might find unusual cars that you average person will buy, like a Ferrari or a Porsche. It's going to go up 10%. The Germans, that's what we're waiting for because this EU deal is a big one. It impacts BMW, Mercedes-Benz, and Audi. And Mercedes-Benz and BMW produce product here in North America, but Audi does not. Volkswagen does, but Audi produces a lot of their vehicles in Mexico. So I think you're going to see a transition of vehicles coming into the U.S., and that's on the companies to make these changes. So we're going to see some interesting transitions, shall we say, in production.
Very interesting. On your live with Lauren Fix, our go-to car expert. Volkswagen in the news today. The report was that they suffered a $1.5 billion loss and blamed it on President Trump's tariffs. Volkswagen, another headline in the Wall Street Journal, said Volkswagen teases Made in America Audis after this $1.5 billion tariff hit. VW and Audi are connected, right? And so what's your reaction to that, to those headlines today?
Well, you should note that the Volkswagen Group, which is, although it's the name Volkswagen or VW Group, is Audi. It's also some other brands we don't get here like Seat and Skoda and Cupra, but it's also Lamborghini, it's Porsche, it's Ducati if you're into motorcycles. So they own a lot of different brands that I haven't listed all of them, but the big chunk of them. And so when you're looking at Volkswagen having a loss, I don't believe it's because of President Trump. I believe they produced a product that people don't want, like the ID4. They're sitting all over dealer lots. They cannot sell the all-electric vehicle that they thought everyone would want. And unfortunately, I really love the ID Buzz, the bus. It's a great product. They did a great job putting it together, but it's electric and it has short range. If that had a range extender or it was a hybrid platform, I don't think they could make them fast enough. So they built what the government demanded. They didn't build what the customer wants, and that's why they're in trouble. It has nothing to do with President Trump. He doesn't tell them what to build. They made those choices.
That's an excellent point, and we've also heard from Ford and GM, right? Also posting disappointing earnings. So, what's your reaction to these reports coming in that the automakers are having their profits are stalling out?
I think in both cases, self-inflicted wounds, I think, would be the nicest way to present that. When you have engines that always were built in Cleveland and Detroit and all over the U.S., now they're making them in Mexico, they're making them in China, they're making them in other countries, and then they're importing them into the U.S. because they were trying to avoid the UAW. I understand it has to do with dollars and cents, but there's also a greed factor where you have to realize your margin may not be the same. And so what they've done is they've increased the price of the vehicle of all their vehicles, both GM and Ford, to offset their losses they were taking on electric vehicles, but then they were taking the components and having them made in other countries. And that's why they're in loss position. So I think you're going to see a mass reduction in production of the Ford Lightning truck, as well as the Mach-E and all of the GM lineup. And again, just like General Motors, they make some really cool Cadillacs, but if they go all electric, they're going to put themselves out of business.
Yep.
You have to make what people want. And that's what I keep saying.
All right, and you did a great job on your latest, one of your latest Car Coach reports, talking about automakers are fighting the feds. Automakers say their freedom is under threat. Tell us more about that.
Yeah, the automakers have said to Washington, would you get out of the way? Because we have a lot of outdated technology that was designed when they made the rules in the 50s and 60s. The technology that you see in Europe, which one of the big ones is lighting. They have this LED lighting that can actually be brighter for the driver, but not blind oncoming traffic. We've all experienced that at some point. We were like, why does this person have their high beams on? But it's the bright lights and the fact that they can't use that same technology here. They also don't use side view mirrors. They use cameras in many cases, and some of the advanced technologies that would make you safer on the road is not being applied here because every single little software change has to go through a whole paperwork process rather than delivering it to them as each change goes through. So they've made it more difficult, and I'm hoping that Sean Duffy hears this. I put it out everywhere. I sent him an email personally, hoping that they can realize that if car manufacturers are struggling to get the rules through, it costs them more money and it makes cars more expensive. Let's not make them lighter and less safe. Let's make them safer for both the consumer and for other people around you.
Terrific, Lauren. Thank you very much for joining us live here. Lauren Fix, editor-in-chief of Car Coach and the co-host of the Total Car Score podcast, live with us here on Mottek On Money on 790 KBC. I'll be back with more at 4 Monday afternoon right here on 790 KBC.
Nightly Scroll with Haley Caronia.
Hello to all my homies in the chat. I'm Haley Caronia with some very inconvenient truths.
Your go-to place for the hottest button issues.
Don't you hate when facts get in the way of a good news story?
Cut through the noise and get ready to scroll through the chaos of the modern world, one hot take at a time.
Hear me out. We might need to spread this information 24/7. Let's get into some scrolling time.
Nightly Scroll with Haley Caronia.
I love this place.
Follow and listen on your favorite platform.